Welcome back to Alpha Recap, your aftermarket wrap-up from stockalpha.ai. Glad you joined us. Markets closed for the day, and we've got a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, super excited. We're breaking down big private funding moves, AI-driven flows, and some noisy action in leveraged and microcap names. Strap in.
Let's start with the big clean energy headline. LanzaJet closed a $47 million tranche and reported a $650 million pre-money valuation. That round pulled in strategic names like International Airlines Group, Shell, Group ADP, LanzaTech, and Mitsui.
Whoa, that is a major signal. I mean, when you step back and look at this, having airlines and energy majors in the cap table is basically a fast lane to commercial deals.
Right. To put it simply, LanzaJet makes alcohol-to-jet sustainable aviation fuel, ATJ-SAF, which turns ethanol-like feedstocks into jet fuel that can substitute conventional aviation fuel. This funding and those partners suggest the tech could move from demos into real commercial offtake.
And that's huge because offtake from an airline or a company like Shell can de-risk a project quickly. It's not just cash, it's a customer and a distribution channel.
Exactly. Watch suppliers across the SAF value chain. Engineering firms, construction contractors, feedstock providers, they could see knock-on announcements if LanzaJet starts signing offtake or EPC contracts.
Quick thought. Pilots converting to commercial scale usually means project financing shows up, and that's when public suppliers might re-rate. So this is one to watch closely.
So what really stands out here is the strategic investor mix. Those names suggest LanzaJet could avoid some of the typical commercialization pitfalls.
And remember, private market momentum can presage public market catalysts. If Shell or IAG announce offtake, that's headline-worthy.
Moving to the market tape, NVDA finished the day up about 1.5%, roughly 1.63%, and closed near $188 on heavy volume, about 160 million shares traded.
Yeah, NVIDIA continued to dominate flows. Momentum traders leaned on that tape today. And with heavy volume, it kept AI and semiconductor leadership in focus.
NVIDIA's role as a bellwether matters because institutional flows tend to follow it. When NVIDIA drew heavy volume, it pulled attention and capital into adjacent AI hardware and software names.
That ties into Cloudastructure too. They deployed solar-powered AI security enclosures across multiple states. Off-grid AI plus SaaS revenue is exactly the downstream use case investors like once the compute layer scales.
Right, Cloudastructure combines edge compute, resilience, and recurring revenue. That's the trifecta for industrial AI plays. Hardware deployment plus subscription economics.
I mean, when you hear solar-powered AI enclosures, it sounds futuristic, but it's also practical for remote assets, pipelines, cell towers, construction sites.
We should shift to market microstructure because today, that was loud and clear. Lots of concentrated, volatile action.
Yep, the Direction Daily SOXS Bear 3X leveraged ETF fell about 3%, down 3.11% to roughly $1.72, and it traded about 580 million shares. That's massive volume for a leveraged product.
That scale of trading in a leveraged ETF amplifies risk. Small moves in the index can translate into outsized dollar swings for holders, and rebalancing flows can force more selling or buying.
And on the tiny cap side, Quantum Catcher slid about 4%, down 3.78%, to about 18 cents, with roughly 125 million shares traded. That's a heavily traded penny name with real liquidity and price risk.
Heavy volume in thin caps often signals retail-driven momentum, technical squeezes, or just liquidity events. Without fundamentals or company news, it can be pure momentum.
Practical counsel. If you hold levered or tiny cap positions, review sizing, stop-loss protocols, and margin exposure. For traders, intraday volume and implied volatility should guide position sizing.
Short one. Big move.
Not what anyone expected.
Let's pivot to healthcare and services. CSD announced it acquired BCI, an autism provider in New Mexico, which continues the roll-up trend in behavioral health and specialty care.
Consolidation can deliver scale benefits like improved data, research capability, and better payer contracts. But for investors, the first signs will be operational, patient volumes, and reimbursement trends.
Exactly. These are private deals with limited immediate public market impact, but they can set the stage for later public listings or bigger M&A down the road.
On the private sector recognition front, there were a few interesting calls. NIA landed on the Forbes FinTech 50 list, Green Badger linked up with USGBC California to streamline sustainability reporting for construction contractors, and NYC Disinfection Services emphasized WBE certification for municipal pipelines.
Those are credibility-building steps. NIA's fintech recognition could precede partnerships or a later funding round, and Green Badger's link with USGBC California can accelerate adoption of standardized reporting tools.
True Green Capital Management also had leadership promotions. Internal continuity matters when you're trying to execute distributed generation projects and close deals.
Right, internal alignment reduces execution risk. Small operational moves like that can be meaningful for project timelines and investor confidence.
There were a lot of moving parts today. Private capital fueling industrial-scale sustainability, AI bleeding into physical infrastructure, and then the classic market microstructure noise.
Let's summarize patterns we saw. Private capital is actively funding industrial-scale sustainability technologies. LanzaJet is the prime example. AI continues to act as an accelerant across sectors, and volatility was concentrated in leveraged ETFs and microcaps.
Plus, consolidation in niche services continues. Behavioral health roll-ups, ESG reporting tools, and service providers are all on the move.
For tomorrow, watch for follow-ups. LanzaJet offtake announcements or financing closes could move related public names. NVIDIA's continued tape will keep sector flows focused, and any additional heavy flows in leveraged ETFs could spill into core semiconductor names.
Also keep an eye on filings or company notices from Quantum Catcher. Heavy volume in a tiny cap often precedes regulatory or liquidity events.
Rapid-fire update recap. LanzaJet closed $47 million at a $650 million pre-money. NVIDIA finished up about 1.63% to roughly $188, with about 160 million shares. The SOXS Bear Leveraged ETF fell about 3.11% to about $1.72 on roughly 580 million shares. Quantum Catcher fell about 3.8% to about 18 cents on 125 million shares.
And quick hits. Cloudastructure deployed solar-powered AI security enclosures across states. Green Badger partnered with USGBC California. NIA made Forbes FinTech 50. CSD bought BCI, and True Green promoted leadership internally.
Bottom line takeaways. 1. Private strategic capital is accelerating SAF commercialization. Watch for offtake and project financing. 2. AI demand is keeping chip leaders like NVIDIA in the center of liquidity flows, and that funnels capital into downstream AI applications. 3. Microstructure remains fragile. Leveraged ETFs and microcaps can move fast and hurt positions if sizing and risk controls aren't tight.
Yeah, and for listeners who trade, remember, trade your plan, respect volatility, and size positions for the worst-case scenario, not the best case.
All right, that's a wrap. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. See you tomorrow after the close. Happy trading!